time to move on to the markets, and joining us this week to discuss the livestock markets is Dr. Scott Brown. Dr. Brown is the Director of Strategic Partnerships for the University of Missouri's College of Agriculture, Food, and Natural Resources. Scott, thank you so much for joining us today.
Thanks for having me on, Bill.
And starting off today, I just kind of wanted to get your take on last week's cattle on feed report. There didn't seem to be too many surprises for producers. Placements were up, and marketings of fed cattle during October were down about 5% from 2020. What were your big takeaways, and what do these numbers mean for our producers?
Yes, I think the biggest takeaway from the report is it did in fact come in very close to pre-report expectations. So more cattle placements. I think as we looked at the October sales data out of many feeder cattle markets, we were seeing that increase as we moved some calves off of dry weather, maybe earlier than we would have in the past. So I didn't see a lot out of the report. On feed numbers continue to run at a year ago levels for the most part. So we're still full in many of those yards across the country. For me, it just points to what's going to transpire as we continue to get into 2022, which I expect to be fewer cattle placements and a tighter feeder cattle market as we get further into the coming year.
And recently it was reported that retail beef prices have increased 33% over the last year. Bids have been steady, with some reported higher prices at some auction markets. It seems packers have been highly profitable despite problems from COVID and other supply chain concerns. Are we starting to kind of see some balance in profits between packers and producers here?
So I think we're beginning to see the part of it. I mean, you raise a very good point. We're pushing record prices of beef to consumers, and of course, that always opens up the question of whether or not consumers were to shift away or consume less beef. So far, all the signals are demand continues to be strong, so it's good news on that front. I think when we look at the packer side of this equation, it's beginning to change. So margins still remain relatively wide, but I think as we look into 2022 and market-ready cattle supplies become tighter, I expect a situation where margins will continue to decline, and it puts producers in a better situation than maybe we've been in for a number of months. And you put on top of that some additional capacity that'll be coming on over the next couple of years, and I think we're getting ready to change the profitability for many in the packing industry as available supplies will match up much better with available capacity.
And I'd like to get in a little word on hogs here while we've got you. The most recent quarterly hogs report, it wasn't too spectacular for producers. However, February lean hog futures did hit a 5-week high last week. What were some of the contributing factors to those gains?
Yeah, so I think when you look at just where we've been in terms of breeding inventory and sows farrowed, et cetera, for me, I look at the first 2 or 3 quarters of 2022, and I actually expect pork production to be below 2021 levels for those same quarters. So I think we continue to be, relatively tighter in terms of pork supplies. I say that after what's been a number of years where we've seen quarter-over-quarter increases that now have kind of come to a halt. So I can be a little optimistic as we look ahead for pork prices. I know markets maybe recently haven't reflected that, but I do think there's some reasons to be optimistic as we get into the early part of 2022 and see those pork supplies tighten up. Of course, trade matters a lot in this discussion, and just how much China wants U.S. pork as they get into 2022 is certainly something we're going to watch.
And Scott, before we wrap things up with you today, do you have any marketing or risk management advice for the pork or beef producers that may be watching today?
So I keep saying it seems like we've gotten in an era where volatility is more the norm, not the exception, and risk management becomes more and more important, I think, in this more volatile world that we seem to live in. I sometimes am a little reluctant to say that out loud, in that I hope at some point we return to something that's more normal, but input cost increases that we see today, volatility from farm level to retail level, all those things to me just encourage me to remind folks that there's times to do risk management, and maybe now is a good time to do that, especially if you can at least lock in a portion of your product with some type of reasonable return.
And that's going to wrap it up for us today. Scott, thank you so much for joining us this week.
Thanks a lot, Bill, for having me on.